Welcome to another Friday morning at Gimbal World Headquarters. I hope your week has been a great one. I'm going to throw up a disclaimer here so y'all can
You're going to throw up a
I'm going to throw up a disclaimer. Hopefully you guys
sorry.
Yeah.
That's not nice of me.
How do I get that? Maybe I move this over here. Sorry, fans. This is there we go. Now I'm just going to share that screen with you, and the world is safe because you know that there are risks out there.
I'd say another disclaimer. Double check your 1099s. If you got questions, call in. I've been happily pleased to hear back from clients who have reviewed their 1099s, 1099Rs. Stuff's coming in the mail, and that's encouraging. So it's and if you don't see, or if you don't have a physical copy, you can even get online to Fidelity and fidelity.com, and you can pull stuff off. I'm happy to help you pull stuff off the interwebs.
And I have seen LPL 1099s coming in people's mail, and we have put instructions in the latest newsletter to help you get on, if you don't see those, onto their website to get access to those. So feel free to try to do that as well and see what happens. All right. So I saw a cereal bowl with the disclaimer on the bottom of it. It was a Fruit Loops bowl that said always use with adult supervision. And so that's why I said always invest with adult supervision. You don't want to take this stuff lightly. So I think that's long enough to give you guys plenty of time to understand that the markets are risky and we have strong opinions here. All right, Douglas, what else do we need to go after today?
Well, I think I've said this often, and I feel very bipolar when it comes to the stock market. One minute maybe morning, I'm feeling one way about the market, and then by the afternoon, I'm feeling another way about the market. And I think back to the last 3 weeks that we've done this show, and January's been just flat out back and forth like a tennis match. One week it's looking good, another week it's not looking good. And then, here we are this week. We've had a really strong last few days. And I think despite the back and forthness, one thing that continues is January has been looking all right. And that's just been a delight to see. It's been a delight that we haven't retested the lows. And, the S&P 500, the big stocks out there, the small stocks out there, even the technology stocks out there have been trending in the right direction.
Yeah, that's been really a welcome change over the last few days. And you can see this is the beginning of the year over here. Right here is the start of the year, and we've battled with this 50-day, this red line here, the 50-day moving average. And what we've been talking about is we'd like to see that the market can get above this 200-day moving average. And a week ago when we were talking with you, it was really battling with it. We had 3 days in a row where it acted like it was just going to bounce down, like the last 2 or 3 times it hit that. And then the beginning of this week, we had, a big strong day at the beginning of the week, and then 2 days that I think were very optimistic. This day right here and this day right here, where the market sold off throughout the day. And then I'll blow this up a little bit so you might be able to see it a little better. But what it did at the end of the day is, we call those up arrows, is that it finished near the high of the range for the day, which is just the opposite of what we've been seeing for the last year and a quarter. That usually if it started dropping midday, it ended lower at the end of the day. So that's really positive developments, and that would explain some of the moves we made on behalf of you and your accounts. And we'll probably be hopefully making some more moves in the days ahead.
And Keith and I, we look at the stock market sometimes through a microscope like this, where we are diving into the details of a day or 2 days or 3 days. We know that investing is a long-term thing, but it's important to look through the microscope, because if you trace back to even the summertime, can you click back to the daily real quick and then go to the summer months, or no, I'm sorry. Yeah, the summer months, we got right up to the 200-day. And then if you click all the way over to after Thanksgiving, it punched through and then reversed. And so where we are today, who knows? But the market will tell us, and when we can look at it through the microscope, we can see it.
And the fact of the matter is that historically volatility has been much greater when you're below this 200-day moving average than when you're above it. And so we're living under the assumption you prefer not to see wild swings on your monthly statements. And so we've been waiting patiently to get to this point where it looks like the trend has quit this downward momentum and direction. And maybe we're going to start in the days ahead seeing this thing work its way higher. And that 4,100 number over here has kind of been the number I've been watching for. And who knows, today may be the day where we pop above that. So that'd be really encouraging.
Been nice to have some good money market rates too while we're being patient. I mean, we haven't always had that, so that's been very encouraging. Can we click to the NASDAQ?
Very easily. It's just this button right here.
And so here, this is interesting. We're right at the 200-day. If you look to the far right, the NASDAQ is making its way through the 200, which it hasn't done in forever. And when I say forever, it means like back to probably November 2021. But so it's making its way back, and it tried to do this again in the summer and tried to do it back in the spring. They could just never really get there, and so it's been good to see.
Yeah, when it punctured it right here, it just began free fall and had a little rally, free fell some more, rallied a little bit more, and then it's like somebody let the air out of it this the springtime of last year. And so that's when we broke below it over a year ago. And so when we go back to today, it's beginning to look like it's kind of that old saying, buy low and sell high. It looks like we might be able to participate maybe in the days ahead.
We can't, I don't know a way to show this. Maybe you do. I was trying to play around with O'Neill's indexes, but like there's an index out there. It's the S&P 350 Euro 350, and it's basically the top European companies, and the European companies have really been rocking. And some may say that fashion starts in Europe, and maybe the fashion of a new bull market will start with some of these European indexes. But there was a time, like really early in my career, where the smart people from Morningstar would say, you want to have 15 to 20% of your portfolio in a European allocation fund or something like that. And that has just been the wrong decision for so long, but it's great to see some of the world start to participate again.
Yeah, not only the European, but the one that's really counterintuitive to a lot of folks is the Chinese markets. And to think that Chinese stocks are rallying with all this is hard to imagine if you're not paying attention, but it's definitely a reality that's going on out there.
Hey, one last one. Can we look at the S&P 600? So these are smaller companies. There's another index out there called the Russell 2000 that you might hear if you watch, MSNBC or whatever those shows are. But the small caps have been doing great. These smaller companies are able to pivot a little quicker than some of the bigger names out there, but it's this index has really been doing well, and if we do continue to punch above the 200, I could see this one trending and continuing on.
Yeah, I was intrigued by this line right here, but it's saying that the volume is up there. I bet that's just not correct
Yeah.
because it's too early in the day for that volume to be that high. Yeah, they're the leaders of one bear or bull market don't tend to be the next leaders. And so it'll be real interesting to see how 2023 unfolds. And maybe we are in the bull market now. So we are excited to take advantage of that situation. Any other charts, Doug?
Well, if you just if you want to go back to the 500 real quick, the stock market historically has been a leading indicator of what can happen with companies and the economy. And I think you look back to even, the beginning of 2022 and the sell-off began, it got tested in March and just started to fall. And it was an indicator of what's happening right now in our world. And so as the market starts to recover, if this continues, perhaps it's an indicator that 18 months from now, 24 months from now, we'll be looking a little better with jobs and economic data too. So that's just something to keep in mind, that these are leading indicators to what's happening in our world.
Right, and like this drop on the S&P 500 from the high to the low it's basically a 25% drop, and never before in recorded data have we had that big of a drop without being in the midst of a recession. I know some people argue that we are. I was reading a little bit of Brian Westbury's comments yesterday, and that the GDP is growing again, and so, but I think he's long-term pessimistic, not like overly pessimistic, but I think he believes he's the first trust chief economic advisor, and I think he thinks that we'll see a recession in the second half of 2023, and it's not hard to believe that might be the case. What else is kind of on your mind today, bud?
Well, it's been encouraging to see savers being rewarded. I think so many of you guys that we get to work with are really good savers. I don't know if your parents taught you or if you learned by observation from other people, or if it was just kind of like innate, but I'm encouraged to see the savers being rewarded, and something came out last year that I thought was pretty cool. I was talking with one of the lead gals at the Indiana 529, and she was giving us a look into the future, saying that they were going to increase the credit. And so that's out there for you guys who have 17-year-olds like me, or who have 1-year-olds, and you're interested in saving money for the future. The Indiana 529, if you're an Indiana resident, you put in $7,500, you get a 20% tax credit on that money. Credits are better than deductions. And so that's $1,500 in your pocket. You could pretty much you could have a risk off strategy and have an instant 20%. So that's not too bad. I think that's pretty encouraging.
We use the Indiana 529 direct plan, and it has like a savings account in there. And so literally, I don't know what the parameters are, but like we're spending the money as quickly as we put it in there. So we don't put it at risk. We put it in the savings account.
Because you have
kids in college. Kids in college, right?
Yeah.
So we need to pull it out pretty quickly. And so I think a lot of times folks forget that it's a good thing to use even while you have kids in college. And if you have kids in college and you think the 529 doesn't work for you, it's an immediate $1,500 in your pocket if you take the money through there first and then reimburse yourself for the expenses. So don't neglect that free money. If in fact you have kids in college, it's as good a time to do that as any.
Yeah. High five, Indiana. Nice work.
Yeah. I had some I just found some demographic stuff this week I thought was really interesting. So I don't know if you have something more important than that.
Let's go with it.
I thought these were really thought-provoking. I saw a I think it was an English or Canadian legislator talking about the lack of significance, what they could do as a country to deal with global or climate change. And I saw this and I thought it was pretty interesting. Because our culture is wanting everything to be electric vehicles, and that all these things are going to happen and be available in a very quick fashion. And so what this chart shows you are the kind of the largest economies in the world: China, US, Europe, and India. And then it breaks down where they get their electricity. And so this reddish color is coal. And you can see in this chart from Oxford Economics that China uses more coal as part of their electricity than we use total electricity.
Math is a wonderful thing. Did you know that going in?
No,
I mean, I never would have thought that.
Yeah, and so everybody is demonizing coal and coming at the United States that we need to make more changes on things. And
check out India.
Yeah, and so India is still using more coal than us, and Europe's not much less. And so the reality of it is coal is not going away unless somebody wants to go demand that China quit using coal. And so I found this to be really thought-provoking. And
gas.
China, one thing China is doing that's really interesting is electricity, which makes a lot of sense.
Pretty cool. Yeah.
The Tennessee Valley Authority is creating a good amount of energy in Kentucky and Tennessee, but there's just a lot of options out there. And probably if you look over here as well, the nuclear option is creating some energy as well. So it's just interesting for me to look at all that and to ponder, okay, what am I hearing and what's the reality of the situation?
There's probably some kids at Purdue right now who'd be fun to talk to about this. I mean, they are dreaming of ways to make the world a better place and run more efficiently. And can you imagine the investment opportunity ahead, like in some of those colors?
Yeah, and to imagine that really the only place that you can turn the dial is where you have freedom.
Yeah, that's right.
Yeah, and I don't know that China really
freedom to compete too.
Freedom to compete, freedom to give feedback, and
yeah.
I don't know that China is open to anybody's feedback. And so, just a thought-provoking slide that I found this week. I thought that was really intriguing.
Where do you run across stuff like that?
I've got a variety of things. I get emails from different economic places, and I have certain people I watch on Twitter that are just really helpful for me thinking about the economy, and I found them to not just kind of be emotional, but they're thought-provoking with them.
That's cool.
Like this one is I don't remember who gave me this one. It's not the one I was looking at. See if I put it over here. I just screwed up all these, so you guys you don't get to see them all this week, but I had a demographic one of India versus China that I'll show you next week. But the Indian population is much younger than the Chinese population, and the Chinese population is aging. And a lot of people are wanting to focus on the economic growth of China. But I would argue that if you've watched part of the economic engine of the United States, that a lot of it is driven by birth rates and demographics, and so where the growth might be coming in the future may not be the traditional places, because if you don't have employees that are wanting to work, it's probably going to the productivity in the world is going to probably shift to those places that actually have some people to do the work and are motivated. And
Japan's made the news here recently. The birth rate in Japan has just been on a decline for many years. And so they have more vending machines per capita than anywhere else.
Yeah, and I wouldn't be surprised the US birth rate is going to decline as well, just because some of the COVID thing disrupted the dating process and isolated a lot more people. And so just people trying to connect and that kind of thing is problematic to the long-term demographics. But I don't know that I've even heard anybody talking about it. It's just observation I made through that process.
All kinds of education on the show today.
Yeah. How about this one? This one, again, it goes back to some of the stuff that we talked about during the COVID times, but down below it has leading causes of death of people. This is ages 25 to 34 in the United States. And it's just really, it's just really sad to me.
It's a tough place.
Yeah. I mean,
Yeah.
The COVID numbers are these little dots right here of these people. But while all the news is catching that COVID, and you see what's going on with the drug overdoses, and I don't hear anybody really champion that, and the increase of that. Well, again, that's one of those things that will work against the workforce. It's going to work against productivity of our economy, because those families that are affected by that, it affects multi-generations of families when you have that. And then we've also seen a constant increase in homicides and suicides, and those are trends and not events. Like a pandemic is kind of an event that comes and goes. So that was one that caught my eye. And again, it's a demographic thing. And then the final one, let me see here. Yep. The final one was not demographics, but it was Vanguard came out with their estimates. Did you see that this week?
Well, I was looking at Fidelity's estimates, and they're kind of similar. And I absolutely hate stuff like this.
Yeah.
I mean, it's like, what in the world? Like that's like me trying to predict the weather in December of 2023. I mean, it's like, come on.
Well, even trying to predict the snowstorm this week, right?
Exactly. Exactly.
Yeah. And I just thought interesting that in general, Vanguard expects a 4.7 to 6.7 return on US stocks in the next decade. And they're expecting US bonds to be 4.1 to 5.1. And even, these high yield corporate bonds are 6.6 to 7.6. If you were just taking this data alone, it would seem kind of useless to put money in US stocks as well.
Right.
And so I don't know what that data does for any human.
It
like
does
when you have this
does
data,
nothing for me.
Yeah. And so
I used to really hone in on this stuff. Did you?
Not a lot. I think early on somebody told me that in the next decade, this would have been the 80s, the trash company stocks are going to drive. They're going to be the ones to drive it.
Yeah.
So I don't remember who it was, Waste Management or whoever. I thought this is the one. And I think if you go back,
is that Harry Dent who wrote Roaring 2000s? Is that it?
Harry Dent had some of the demographic stuff. The one I'm thinking about came from a national brokerage company about the waste management. But like at the end of that decade, I think it was maybe one of the worst investments that you would have had. And so
it was garbage.
Yeah. And so why I even share this with everybody today is don't let this sort of information disrupt your thought process, because these folks that are making a prediction for a decade ago, who would have predicted the last decade? Who would have predicted that we would have shut down the economy and told people not to go to work? So many things that happen. You pretty much have to take life a day at a time, take your investments on a little shorter term perspective than maybe what people are telling you. And we're watching this stuff for you on a regular basis. We get our kicks doing that kind of thing and finding those opportunities.
To continue this rant, we could do a financial plan for you today that would have some kind of forecast of, if the market does this, then you'll be here. If the market does that, then you'll be there. And so it doesn't take into account your creativeness, your health, events in your life. And so we just, not that we're living under the microscope, but we just prefer to do it. Hey, let's just do it day by day.
Yeah.
Let's do day by day. Kind of have a picture of the end in mind, work backwards, But let's just walk through life with you. Let's walk through life with the stock market.
Yeah, and that's what with most of the plans I've helped folks with in the last decade or more is that may have had a longer term plan, but we literally sit down annually and say, okay, here's where we are. How does this look as we look to the next 12 months? Because one variable can change that whole thing. And one variable in any of those markets can make those markets ridiculous bargains.
And I would say that the one variable, the two, the three variables that we've seen have all been positive.
And
Like we're not talking about, hey, this could really wreck you. Like,
Yeah.
no, these are positive things that have been happening in people's lives.
Yeah, and so when you experience things that are different than you expected, they're just catalysts for new thoughts and new ways to see it. I did with my many miles of RVing. I came up with this idea late in the process. I started doing this when I had something go out of my expectation. I would take a selfie of that moment, because what I discovered is when those unexpected things happen, they may not have felt good at the moment, but in a few months later, they were some of the greatest stories I ever had. And so when those unexpected things cross your path, that's the time to call us. Let's talk about how does this impact you and how do we make great decisions looking to the future.
Yeah.
What else, Doug?
That's all I know.
We're going to road trip down to visit some folks in Western Kentucky over the weekend. And I know that a number of people are looking for places to retire. And one of my friends heard that I was going down there. He said, find me a realtor down there because I want some great lakefront property. And so
Yeah.
I'm a big marketer of the lakes in Western Kentucky. They're really fun and they're easy. I-69 goes from Indianapolis straight down there these days. And so it's a good thing.
Yeah, I'm looking forward to it.
I hope you guys have a spectacular weekend and that next week just proves to offer great opportunities to you and that this one is just a good one.
See you next week.